Hello and good morning to you all. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section to confirm that we are all on the same page. So I need to confirm that we are good before we get the session started. So right now, what do we have in the chat? I'm trying to load up my chat at the moment. Oh, great. Thank you, Carrie, for that confirmation. So we are good to go. All right. Okay, Bonjour 581. Okay. All right. I want to welcome you all to yet another promising session of Extra and Speed Life, hosted by my humble self, Sheriff Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we are going to be deliberating, evaluating the financial market using technical parameters such as trend continuation patterns, reversal patterns, market structures. We're going to be using this to identify trading opportunities lining up for us in the New York session, which is going to be starting in the next couple of hours. And one thing we're going to be doing first is to look at what we've deliberated on yesterday. We are going to look at how well those pairs are doing. Well, we were able to do how many pairs yesterday we were able to trade yesterday. Let me see. I think we were able to do about one, two, three, four, five, six. We did 6 pairs yesterday, so we are going to be taking a look at all these pairs this morning. We are going to be seeing how well they are doing, and if there are any updates, any advice, or commentaries, I will be sharing with you during the course of the live session today. And also, if you have any pair you want us to look at, feel free to drop it in the comment section. It could be a pair, it could be a commodity, whatever it is. Feel free to drop it in the comment section, and I will try as much as possible to inculcate it into my plans for the day. So without further ado, let's dive into the chart and let's see what is happening. And well, before we go into the chart, one thing I also want to share with you this morning is the economic calendar for the day. And we have a major event coming up today. I think in about 6 hours from now, we're going to be seeing the ISM services, which is probably going to be affecting the USD pairs today. So it's a very sensitive event that's going to be happening. So we are going to see how this event is going to affect the market today. So one thing we're going to be doing on, if we are going to be treating any USD pair today, we are going to be looking out for market structures where we want to anticipate that huge move if it's going to happen. So let's dive into the charts and let's see what's happening. The first pair we are going to be looking at today is the US oil as usual, and then let's see what is happening. Okay, I think I can see Ashitaka in the house. Good morning, Ashitaka. Glad to have you around. And you want us to treat the silver. Okay, I'll pen that down and let's see how we could include that into our plans for today. So I think, okay. All right, so you stay alert on to the spam messages. These are spam messages. Please be mindful of these links as they are not vetted by Extra and Speed at all. So be mindful of clicking such links. Okay, so the let's move on to the charts and let's see what's happening. So we have the US oil here, and we're actually looking at what is happening on the daily time frame, sorry, on the 1 hour time frame. And if we remember yesterday, we had a structure right around the $89 area. That is somewhere around this point here. We identified this level yesterday where it has been a major determinant of price action in the past. And one thing I shared with you yesterday was that we should be waiting for price to give us a signal in the form of a breakout of that structure, whereby a multiple retest of this level will give us a confirmation to join the rally to the upside. However, we had that move, we had that signal. Let me show you. We had that signal, we had the breakout of that structure yesterday, and we had price come back to do multiple retest of this level, and then we joined the bullish momentum here, but unfortunately we were stopped out of that position, hereby we closed in a loss position on the US oil for the week. So now going into the New York session today, what is going to be our plans? Now, if we look at the current structure we have here on the 1 hour time frame, I think it's appropriate we go to the daily time frame. Let's see what's happening, especially for those who are not part of this session yesterday, so that we can all be on the same page. I think that's fair enough. So let's scale up to the daily time frame. And what do we have here on the daily time frame? Like I said yesterday, we are on a very strong bullish momentum in the last couple of years, and to emphasize that, we were able to identify this bullish trend line after connecting the series of higher lows at this point in time. As you can see how I've highlighted it on the screen, and something interesting later happened during the last couple of weeks as we started seeing multiple rejection of that bullish trend line around this area, giving us a clue into how sensitive that area is, and a likelihood that we could be having a trend continuation to the upside from there. That is, price could likely respect that bullish trend line one more time to push price to the upside, or we could be having price break down the structure in the form of a breakdown structure, retest of structure to send price crashing to the downside. So we are really quite in a very sensitive area right now, so it is very, very important that we take caution to be able to take that move when it finally happens. So we don't want to jump into any unnecessary position at this point. So because of this, we were able to scale down to a much lower time frame, where we want to be looking out for structures that will support a direction that we might want to be heading towards for the week. Before I go down to the lower time frame, I also want to share with you how we were able to identify a key level at the $85 mark. And if we look at how this $85 has been respected in the past, you can see that it has been a major determinant of price action. If we go to as far as the later part of last year, somewhere around the month of October and the month of November, we can see how the $85 level has been a selling niche for participants in the market, where multiple rejection of this level took price right back into the bullish trend line, which we identified earlier, and then we saw a significant breakout and retest of that same $85 level in the early month of this year, that is on January, which pushed price up into as far as the 129.50 cent area. So right now, since the beginning of the year, we saw our price declined drastically and right back into that bullish trend line, which also shares a confluence with the key level we identified at the $85 mark. You can see how sensitive this area is, sharing a confluence, and at the same time we have multiple rejections of this level, giving us a clue into how sensitive that area is. So we need to be mindful of how we want to be trading the US oil for the week and the subsequent week as well. So like I said, we're looking forward to either a trend continuation to the upside, that is, price respects that bullish trend line one more time, or it could be broken to the downside, where retest of structure could be sending price to the downside. So in order to trade the US oil, what we need to do right now is to look at how this price has been within this area in the last couple of months. We want to see how the structure is here to be able to determine where we want to be heading for the week. So in order to do that, we need to scale down to a much lower time frame so that we can see the structure very clearly. So we scale down to, let's say, the 4 hours time frame here, and on the 4 hours time frame, what do we have? Now, if we look at what is happening on the 4 hours time frame, remember this is the bullish trend line we identified on the daily time frame, the black tick line you can see here. And then on the 4 hours time frame, the first thing I was able to do on the 4 hours time frame is to identify this bearish trend line after connecting the series of lower highs that began in the month of June. So we have this continuous respect of this bearish trend line. So we were able to connect that bearish trend line. Sorry, we were able to connect the lower highs to give us that resultant bearish trend line. And something interesting happened during the later part of the month of August rather, where we saw a significant breakout of that bearish trend line to give us a clue into the strength of the buyers at this point, and at the same time telling us that the trend line can no longer hold price action to the downside. And if we look at how price has trended from since the month of June, we can see price has continued to find lower lows and lower highs, hereby contracting into that bullish trend line before we saw that breakout of that structure. So now with the breakout of that bearish trend line, hold on, sorry, that was a mistake. Let me see, how do I, okay, good, sorry about that. So if we look at the structure we have here since the later part of August, when price broke out of that bearish trend line here, I think the price broke out of the structure in the month on August, on the 23rd of August, we saw the breakout of that structure. And from a technical standpoint, we always expect that whenever price breaks out of a structure like this, we expect to see price come back to do a retest of that structure to give us a confirmation that price is actually moving in the prior leading price action, which is bullish at this point in time. So what did we see here during the course of last week's trading session? We saw price come back to do a retest of that bearish trend line that was broken in the later part of August. And if we look at how price came back into retesting that bearish trend line, we can see it also shares a confluence with the key level we identified on the daily time frame at $85 mark area. So after retesting this bearish trend line here, we saw attempts by the buyers to push price to the upside from here. So we saw a move to around the $89 area. Price came to find a higher low, and then we saw another attempts to break the $89 mark during the course of yesterday's trading session. So now this is how we got to the point where we were looking forward to bullish momentum on the US oil. Now that we were stopped out in our position yesterday, then one thing we want to be looking at to see how price has been playing out since the beginning of the month. Now, if we look at the current structure here, we can see we have this impulsive move which cannot be neglected. So we have this impulsive move to the downside here, giving us a clue into the strength of the sellers at this point. And remember, this impulsive move broke the bullish trend line we identified on the daily time frame here. So that's the bullish trend line here. And then we started seeing multiple rejection of that bullish trend line after the breakdown of that trend line, giving us a clue into the strength of the sellers at this point in the market. So what we see here right now is something like this. Let me give you a visual representation of what I'm talking about here. So we have this impulsive move to the downside. Then we saw price did multiple rejection of that bullish trend line that was broken, and then we saw this move to the downside. So at this point in time, we might be having a shift in momentum buyers at this point in time. The reason why that is simply because the first thing we did yesterday, if you remember, we were able to identify this bullish trend line after connecting the higher lows here. And what did we see in the last 6 to 8 hours? We can see we saw an engulfing bearish candle that broke out of that bullish trend line here, and that is probably going to be a signal that we want to be looking forward to a bearish momentum at this point in the market. So now that we have the setup here, we have a breakdown with an engulfing candle breaking down this bullish trend line here, and we have a key level at the $89 mark area. So what do we want to be looking forward to during the New York session today? So what I'll be suggesting at this point is that we don't want to be getting too excited at this point because we have seen a signal. We want to be patient enough to wait for price action to give us a confirmation before we want to join the decline. So now with this breakdown of the structure at this point, we want to be looking forward to a confirmation which is likely going to come in form of a retest of this bullish trend line or a retest of the $89 area, where we want to be looking out for patterns on lower time frame that supports a trend continuation to the downside. So this is how we want to take advantage of any bearish momentum at this point. So if we have this bearish momentum unfolding during the New York session today, what we want to be doing is to join the decline at a retest of structure and with a take profit target somewhere around the bearish trend line which we identified earlier. So remember we had a first touch of that bearish trend line here, so there is a likelihood that we could have a second touch here. So we placed our take profit target at this point, which will be dovetailing to somewhere around between 400 to 500 pips to catch here if price moves accordingly. Now there is a caveat to this bearish momentum that we've just cited here, and what is that? Remember we have this $85 level, which is our key level. Remember, we identified this on the daily time frame. So what I'll be suggesting here is this. If price goes back into the $89 level and we see structures or probably somewhere around here, it might not get to the $89 level, but the most important thing we want to be seeing is a reversal pattern around this area or structures around this area that supports a trend continuation to the downside. So if we have joined this move and as soon as price gets into the $85 mark area, somewhere around here, what I will be suggesting is we should move our stop loss to break even. Either move it to break even or lock in some profit at this point. And the reason why I'm stating this here is this. Remember, we are right on a $85 level, which is the key level that has been supporting bullish potential in the past. We can see how this level has been a niche for buying potential opportunities in the past. So there is a likelihood that price could reverse from that point. So because of this, we want to be locking in some profit at this point or move your stop loss to break even. Let's see how price relates with this level, and if we finally have a breakdown retest of this level, we could be adding more position to our existing trade. So this is how we intend to trade the US oil for the week, and let's see how price plays out as we be on standby for any positive any potential opportunity on this one. Now another scenario which I would like to share with you after looking at this bearish momentum I just identified here is that if at any point in time during the New York session we see price come back right up the $89 level, that is price breaks right above the $89 level, and also probably the bullish trend line which we identified on the daily time frame, that is price climbs post these structures, then we want to be seeing this bearish move as a false one. Then a retest of the structure will give us a confirmation to join a bullish momentum to the upside. And remember, our take profit target still remains somewhere around the $97 area and the $100 mark, because we have a structure around here that has been a selling niche in the past, and we want to see how price is going to relate to that level before we want to be thinking of adding more position to our existing trade. So this is what we want to be looking forward to on the US oil. And if you have any question or you need further clarification on what I have discussed so far, feel free to drop an inquiry in the comment section and I will be willing to be of help. So that is that on the US oil, and I'll be taking the next 10 to 15 seconds to run through the charts and see if there are any inquiries regarding what I just discussed so far. Okay, good morning, Geopoker. Hello, Jankra Senate. I hope I pronounced that correctly. Okay, in the absence of no questions, let's move on to the next pair. So the next pair we are going to be looking at is the US Tech. And what do we have here on the US Tech? Now, remember what we identified here yesterday. Let's scale up to the higher time frame so that those who were not part of the session yesterday wouldn't miss out on our perspective on the US Tech for the week. So now going to the daily time frame here and looking at the structure we have here on the daily time frame, it is very obvious that price action has been on a very strong bearish momentum since the beginning of the year. And because of that, we were able to connect the series of lower highs here to give us this resulting bearish trend line, and we saw this rejection during the course of last month. And remember, we were able to take this move right from this point into this area, which gave us over 1,400 pips on this one. So in the last couple of weeks, we've been very profitable on the US Tech. And what was our plan against the new week yesterday? So right now, if we look at the current structure we have here and look at how price action has been evolving since the month of June, we can see that it was caught within an ascending channel where price action continuously found higher highs and higher lows within this channel. So we saw how this channel has supported price action as price action trended towards the bearish trend line we identified here. Then we saw price broke back down into the channel to come back into the support level of the ascending channel here. Now, if we zoom into what has been happening in the last couple of weeks now, we can see that we had this breakdown of this channel, the support level somewhere around here during the later part of last week trading session. I think the last couple of days, the last 2 days, we saw the breakdown of the $12,250 area. That's the breakdown of that ascending channel. So right now, what we don't know now is this ascending channel, is this breakdown a false one? Is it a false one that will later reverse back to the upside? Or are we going to be having a trend continuation to the downside from that point? That is, the breakdown is confirmed and valid. So in order to help our decision for the week, one thing I did to make our job easier, the first thing I did was to identify the key level at the $12,000 area, which is a very, very strong psychological level that we should reckon with for the week. And if we look at the key level here, it's also a neckline of the reversal pattern that was identified in the month of June. Remember, we had this reversal pattern here, something like a double bottom structure, after which we saw the breakout of that structure. Price came back to retest the neckline before we saw that bullish momentum to the upside. So right now, price is back within that neckline zone here. So we have a breakdown of the channel here, and then we have price coming to do a retest of the neckline identified at the $12,000 area. So this makes things more interesting for the week. So now we want to see what is happening since the beginning of the week so that we can see how we could take advantage of either a bullish momentum, that is price continues to the upside from here. That is, we see price move to the upside from here, probably with the intention of respecting that bearish trend line to push price to the downside, probably. That is just a speculation. Or we could have a breakdown of this $12,000 mark to give us a signal of a trend continuation to the downside, after we're going to be waiting for a retest of structure to join the decline. So now let's scale down to the 1 hour time frame. And what did we see on the 1 hour time frame? 1 hour time frame revealed to us how participants have been relating with the $12,000 level. So now when we scale down to the 1 hour time frame, the first thing we observed here yesterday was that price has been caught within a channel. And like I said, the channel looks more like a bearish rectangular pattern if we consider this impulsive move to the downside. Remember, we had this impulsive move to the downside, after which we saw price consolidate between the $12,150 level and the $12,050 area. So we have seen price consolidated within this area since the beginning of the week, giving us a clue into the indecision in the market, and at the same time forming a technical pattern in the form of a bearish momentum. However, if we look at the from a theoretical perspective, when we see a bearish rectangular pattern like this, we expect that price is going to break down that channel to give us a signal where a retest of structure will give us a confirmation to the downside. Well, yesterday I shared with you two perspectives to this. Since we already have a channel running, one thing I said yesterday was that we should be looking for a breakout of either side to give us a signal of what we are looking forward to. So we either have a breakdown to the downside to give us a signal, or we have a breakout to the upside to give us a signal. So now what happened in the last 24 hours on the US tech was a breakout of the channel to the upside. So with the breakout of the $12,150 area, which was observed during the New York session yesterday, during the early hours of today, we saw a breakout of that structure, and then we saw price come back to do a retest of that structure, giving us a confirmation to join the rally to the upside. So if you are taking advantage of this move at this point, kudos to you. And right now we will be in about 70 to around 75 pips in profit at this point in time. So what I'll be suggesting here is to move your stop loss to break even to protect your position against any sudden pullback. Now, why am I telling you to move your stop loss to break even here? The reason why we are moving our stop loss to break even is simply because, remember, we are on a very strong bearish momentum, and there is a likelihood that we could be having any bearish continuation from this point in time, as the move we are taking, this bullish move we are taking, is more or less a counter trend opportunity. So because of this reason, we want to be locking in our position to protect us against such deficit happening to our portfolio. So now that we have moved our stop loss to break even, I want to show you something that we also identified yesterday. So if we scale up a little bit into the 4 hours time frame, there is something we observed here, and we saw this bearish move to the downside. We saw this move to the downside here. Hold on a second. So we saw price move to the downside here, and then we saw the first rejection. We saw the second rejection of this level. Price came to somewhere around the $12,400 area, which also shares the confluence with the retest of the support level of the ascending channel we identified on the daily time frame. Then price came back into the $12,000 area again one more time with multiple rejection of this level. And I'm thinking that the structure we're having here could evolve into a reversal pattern in the form of a double bottom structure. So a double bottom structure will be confirmed when we see a breakout of the neckline here at the 12,400 area. So if we have a breakout of the 12,400 area, then that could likely be a signal that we have a confirmed double bottom structure, a confirmed reversal pattern, after which a retest of the neckline at the $12,400 area will give us a confirmation to join the rally to the upside. So now, what we said yesterday, okay, fine, that we've identified this structure that is likely going to evolve into a reversal pattern. So are we going to be waiting for price to move all the way from 12,150 area into this area, which will be giving about 300 pips before we finally take that bullish momentum? That is, so we were now looking for a way to join that rally, if that rally is going to start up from above the 12,150. And because of this, we were able to identify that channel yesterday, and we said we are waiting for a breakout of that channel or breakdown to give us that signal, which we have already taken advantage of right now. So that is how we got to this point. So one thing I'll be saying here, move your stop loss to break even. Like I said earlier, our take profit target still remains right around the 12,400 and the 12,500 area, which is somewhere around here, somewhere around this area. And the reason why we are having our take profit target around that area is simply because if we look left, we can see that we have a structure already. We have a demand niche here. price broke down and this area became a supply area. So we want to see how price action is going to relate with this level, if we are going to see a rejection of that level, or we are going to be seeing a breakout of that structure to give us an opportunity to add more position to our buying position here. So if we take profit target stays around there, we have somewhere around 270 to about 350 pips to catch here. So let's see how price action plays out on this one. Now, the other scenario which I want to be looking forward to here is a selling momentum. If you are looking forward to selling momentum here, well, I'll be advising that considering the strong $12,000 level we identified here, it's advisable that we look for selling momentum only if we see a breakdown of that channel, or probably breakdown of that $12,000 area, after which we want to be patient enough to wait for price to give us further confirmation in the form of a retest of this area. Then we look out for patterns on lower time frame to join the decline to the downside. Remember, we are profitable on this pair so far, as I since for the past 2 weeks now. We've been very profitable on this one, so we don't want to lose out the profits we had made so far. So we want to be patient to see, look out for emphatic signals that will support that momentum to the downside. So in that regard, I will be looking forward to a breakdown of the $12,000 area to sell the US tech. So this is my scenario here. If you have any question, feel free to drop a comment in the drop a word or two in the comment section, and let's see how we can be of help. Okay, Scott Benji is in the house. Welcome, Scott Benji. How are you today? Good morning. 9708, hello, how are you? Oh, 359, good morning to you. How are you doing? I didn't see you yesterday, did I? I can't remember seeing you yesterday. Hope you're well. Okay, and all right. Okay, 223, hello, good morning. So in the absence of no questions, I want to assume that we all understand what I just explained so far, and let's move on to the next pair. So the next pair we talked about yesterday was the USD JPY, where we were actually expecting a bearish momentum to happen, and we were expecting a bearish momentum, and I also shared with you the other perspective we could be looking at for the week. Now on the USD JPY, we already have a scenario here where price has been on a very strong bullish momentum since when was that? I think somewhere since the beginning of the year, and we've been able to emphasize the trend by connecting the higher lows to give us this resultant bullish trend line. So we have this resultant bullish trend line. Then we cited a double bottom structure during the beginning of the month of August, where we saw the structure here, we saw the double bottom pattern, we saw a breakout of the neckline here, and price has since then continued to find higher highs on this one. And we are yet to see price come back into this neckline, and we don't know if there's going to be any attempt to respect this neckline before another phase of a bullish momentum happens. So since the beginning of last week, we've actually been expecting that we will see price come back to retest the structure to with the anticipation of running into the upside, but that did not happen as price has consistently found higher highs. So when we scale down to a much lower time frame, we scale down to, let's say, the 4 hours time frame, we had a couple of structures around here that we were looking at, and the way things are looking right now, it appears that the bullish momentum is very strong. So on the 4 hours time frame, we identified this bullish trend line, this temporary bullish trend line that has been guiding price action since the beginning of this month, since the beginning of September. We can see how price has consistently respected that bullish trend line, and see what we have here. We saw a consolidation phase here since the beginning of this week's trading session, before we saw the breakout of this 140.800 level. Sincerely, I missed this move. I missed this move yesterday because it happened in the middle of the night over here. We saw the breakout of the 140.800 area, and a retest on lower time frame to join the rally. If you are taking advantage of that move, kudos to you for identifying that. But for me personally, I missed it because I was asleep when this actually happened. Remember, we identified the 140.800 level where we said if we had two perspective here, we had the 140.800 level and we had the 140.300 level, where I said if price breaks down this level, we want to be looking forward to selling opportunities after a retest of structure to the downside. And if price breaks above the 140.800 area, a retest of structure should give us a confirmation to join the rally. So we actually had a retest of structure on the lower time frame on the 140.800 area to set price going to the upside. So if you took advantage of this move yesterday, then you will be in about 90 pips in profit at this point. Kudos to you for identifying that. However, for those who had missed this opportunity just like me, what I'll be doing right now is to, first of all, for those who are in this trade already, lock in some profit at this point. Move your stop loss to break even, or probably lock in some profit so that you protect your position against any sudden pullback. Then the next thing I will be doing for those who have missed this trade like me, the next thing what I'll be suggesting at this point is that we want to be patient enough to wait for price to give us another opportunity to join the rally. So this opportunity could either come in form of a consolidation phase, something like this. We could see something, we could look out for structures like this where another breakout could send price going to the upside, or we could look forward to an outright retracement back into our golden zone area, which would likely share a confluence with the 140.800 area and the bullish trend line we identified here. And then we look out for patterns that support a trend continuation right above that area to join the rally to the upside. So if you are in this trade already, kudos to you for identifying that opportunity. Move your stop loss to break even or lock in some profit at this point. And for those who missed this opportunity like me, I will be advising that we remain patient for price action to give us another opportunity to join this momentum. And that opportunity, like I explained earlier, will either come in form of a retracement, that is, price comes back into our golden zone area or somewhere around the bullish trend line or the 140.800 area, where we look out for patterns on lower time frame that supports a trend continuation, or we look out for a consolidation phase which could likely come around this area to take advantage of that move to the upside. And remember, I shared with you earlier that we have a major event coming up today in the next 5 to 6 hours in the highest time service PMI. And though the consensus expectation is lower than the previous value, so let's see if we are going to be having a positive or a negative result, which is going to be affecting the dollar for today. So let's see what happens. Let's see what happens here. And I just hope you'll be on standby to take off and advantage of that move when it finally happens. So if you have any question on the USD JPY, feel free to drop it in the comment section and let's see how I can be of help. So that is that on the USD JPY. So let's move on to let's just move on to the next pair. The next pair we deliberated on yesterday is the GBP CAD, and on the GBP CAD we've been expecting a bullish momentum on the GBP CAD, and right now price is right in our favor as we are already in about we took advantage of this move right from this point, and we are about 100 pips in profit on the GBP CAD at this point in time. Now, how did we get to this point? How did we get to this level of looking forward to a bullish momentum? Well, when we scale up to a higher time frame, let's look at the daily time frame for instance. It is very obvious that price has been on a very strong bearish momentum since the beginning of the year, and we were able to identify this major bearish trend line after connecting the series of lower highs here. Now, something interesting happened here. We saw the last time price respected that bearish trend line was somewhere in the month of August, where we saw this huge expansion that took price right into the 1.50500 level during the course of last week trading session. And one thing I observed here during the early hours of the week was this. Let me show you what I saw here. This is where price started this week. We can see we had a huge gap here. Price closed here last week. Price closed at exactly the 1.5100 level. That was last week. That's where price closed. But we saw a huge gap, showing us that the activities during the course of the weekend push price to the 1.50500 area. So price started around this area this week. So now, as soon as price started from this area, we saw a bullish momentum. Price came back into the 1.51000 level. Then price came back again to do a sharp rejection of that same 1.50500 level. So what did you see now? When you see that second rejection, what did you see? Yeah, we saw a reversal pattern in the form of a double bottom structure. So we had a double bottom structure like this, and we had our neckline right around the 1.1500 level. And what did we see during the course of yesterday's trading session was a breakout of that structure. And when a breakout like this happened, that is giving us a signal. Remember, we are not getting too excited at the sight of the signal. We want to wait for confirmations to happen in the form of a retest of structure. So what happened during the New York session yesterday was a retest of the 1.51 area, and then we joined the rally to the upside. So that's how we got to where we are right now, and we are right now in profit at this point in time, with the take profit target sitting at around the 1.52700 area. And the reason why that is simply because of the current structure we have here during the course of last week's trading session, and we can see our price has consistently respected that 1.52700 in one way or the other. You can see in the past it has at one point been a demand niche, and as soon as it was broken to the downside, it was consistently a selling niche for participants in this market. So the reason why we are having our take profit right within this area is simply because we want to see how price is going to relate with this level. Are we going to be having a breakout of this level? That is, price breaks out of the 1.52700 to give us an opportunity to add more position to this trade. That is one scenario. And then the other scenario is, are we going to be having price reject this place, resulting into a reversal pattern that will be sending price to the downside? Time will tell. But in the meantime, what we want to be doing here is to lock in some profit at this point in time, so that we don't get caught up in any sudden pullback at this point. Now, going into the New York session today, how do we intend taking advantage of the GP card? Do we still have any other opportunity to join this bullish momentum? Is there still a chance to, for those who have missed this move, is there still a chance? That is one question we want to look at. So right now, let's look at the current structure since the beginning of the week now. We can see that price has consistently found higher lows and higher highs. So what we want to be doing now is to connect the series of higher lows to identify the resultant bullish trend line that we have here since the beginning of the week. So I'll bring out my line chart like I have just did, and then we want to connect the series of lower highs, so higher lows rather. And if we do that, this is what we have here. I want to give this a green color to emphasize its importance for the week, and let's make it a little bit thicker. And so we have something like this. So go back to our candle chart and let's do some readjustments of this bullish trend line. So that it aligns with the week, so we have something like this. So going into the New York session today, we have another parameter that is going to be guiding our actions going forward. So now we have a bullish trend line. So what this simply means is that we don't want to see price go below this bullish trend line. As soon as price goes below this bullish trend line, we want to be out of this trade as soon as possible. That is, price closes below this bullish trend line. And in addition to this bullish trend line that we have identified here, if we look left, we can see that we still have a structure where participants actually gathered at one point in time to buy the pounds against the Canadian dollar. So if we look back into the into last week's trading session, we saw somewhere around the 1.51800 area as a buying niche for participants in this market. So what I want to be doing now is to bring out my line chart so that we can have a precise point of connection. So let's connect those points together, and then we extend it out into where we are right now. and then we give it a label. So we have somewhere around the 1.51800 for the sake of clarity. So we have a level here we want to be looking at. So now, hold on a second. Let's make this more precise. Bring out our candle chart, and then let's have something like this. So it's actually 1.51750. So let me readjust this one, and then we have something like this. I want to make sure that it touches all. Okay. So we have somewhere around here. So now going into the New York session, we also have another key level that will guide our action. So one thing I want to be saying here is this: we don't want to see price close below this level. As soon as we have a candle close below this level, we want to be getting out of the trade. Now, for those who had missed the trade, the bullish situation we identified here, we have another opportunity right around this area. So what this simply means is that if at any point in time price comes back into this area, it will come as low as this area, and then we see like a reversal pattern. It could be your inverse head and shoulder pattern, it could be your double bottom structure. We want to be adding one more position to the trade for those who are still in the trade, and for those who missed out on this opportunity. This is likely going to be another chance we want to be entering the GBP card for the week. So this is how we're going to be looking at the GBP card for the week. So let's see how price action plays out in the next 24 hours, and we shall be coming back here tomorrow to take a review of what we've just discussed here. If you have any questions whatsoever regarding what I've just discussed, feel free to drop your inquiries in the comment section, as I will be I'll be checking the comment section from time to time to see if I can be of help. So let's move on to the next pair, and the next pair we treated yesterday was the USD CHF, and we were actually expecting a bearish momentum to happen on the USD CHF yesterday, and we got a signal, but we're still having a dicey situation around here. So how did we get to the point here? How did we get to this point? Let's scale up to the daily time frame and let's see what is happening. So on the daily time frame, hold on a second, let me reset this chart. So on the daily time frame, since the beginning of the year, we've been having strong bullish momentum on the USD CHF. In fact, the dollar has been very, very strong against the Swiss franc, and it is evident after drawing this bullish trend line. We connected a series of higher lows here, and we were able to identify this bullish trend line. That was the first structure we identified here, and then the next structure we identified here was a key level at the 0.95700 area. And if you look left, we can see how this level has been a major determinant of price action. We can see ever since price broke out of that key level in the month of April, we can see how price has consistently respected that area. Buyers have gathered around that area to take price to the upside. We saw an attempt by the buyers in the month of May. We saw another one in the month of July, and then we witnessed a breakdown of that level. Then price came back to retest that level, hereby turning that level into a selling niche that took price back into the bullish trend line, which we identified earlier, which later pushed price to break out of that key level. So that's the second parameter structure we were able to identify here. Then the other structure, the last one, was this bearish trend line here. So we were able to connect this the lower highs here to give us this bearish trend line, and as you can see, what happened in the later part of the month of August, we saw a significant breakout and retest of that bearish trend line, which also shares a confluence with the key level at the 0.95700 to give us a signal of a bullish momentum. And as soon as price broke out and retest that level, we have seen that price has consistently found higher highs and higher lows. And from a technical perspective, I'm expecting that, okay, if this happens, there is still a likelihood that price will come back to do a retest of the key level or this bearish trend line, where a trend continuation could happen. However, when you zoom closely into the structure that we have since the month of July, we can see that we have a selling niche right around the 0.98500 area. This is evident after we cited multiple rejection of this area by the sellers, and right now price is back within that level in the last couple of days. So we've been seeing sharp rejection of the 0.98500 area, giving me a clue into a possible selling momentum happening from that area. That is, if price does not break above that level, then a multiple rejection of this area could likely send price going to the downside. So this is the perspective we saw on the higher time frame, and in this regard we have to scale down to the lower time frame to actually see what is happening. So when we scale down to the 1 hour, I think it's the 1 hour time frame, we saw, let's look at what happened on the 4 hours time frame. So okay, so on the 4 hours time frame, this is what we have here. Since the beginning, I think since the beginning of last week trading session, this is what we saw during the course of last week. Price has consistently respected this temporary bullish trend line. And one thing I said here yesterday was that we are going to be having this trend line as our yardstick, this bullish trend line, coupled with this key level at the 0.9800 level. And now what are we looking forward to? I said something here. I said if price breaks down, does a retest of this bullish trend line, we want to be joining the decline. So we actually joined the decline yesterday. Let's scale down to the 1 hour time frame. We actually joined the decline yesterday. I joined this trade yesterday, and let me drop this like this. So I saw this move. Hold on. I saw this move. Price came down, retested, and then we saw the move to the downside from here. And price moved about 20 pips in that direction. Hold on a second. Let's see. Okay, about 40 pips in that direction. And then we saw this sudden reversal move to the back into our entry zone. I actually moved my stop loss to break even, so I was stopped out at break even at this point and right around this area. And one thing we can see here since the beginning of today's trading session was that price has been respecting the 0.9800 levels. You can see a multiple rejection of this level. So I'm thinking that this bearish momentum is still going to be valid, in the sense that we had this signal during the course of yesterday's trading session in the form of this breakdown of this bullish trend line. So there is a likelihood that price would either come back into the zone, do multiple rejection of this area before we see the trend continuation to the downside, or there could be a move to do a retest of this bullish trend line. Remember, when we see, from a technical standpoint, when we see price break out or breakdown of a structure, we expect it to come back and do a retest of that structure to give us further confirmation to join the breakout. So now that we have the breakout here yesterday, there is a likelihood that price could come back into this area. In fact, it could be a very sharp rejection, probably during the events I identify on the calendar today. We could see a very sharp move right back into the 0.98350 area, where price rejects that area. Then we push price to the downside from there. So I'm still expecting a bearish momentum on the USD CHF. So let's see how price action plays out in the next 24 hours, and we will come here tomorrow to take a look at what has happened, and I will be sharing with you my advice in that regard. And in addition to what we have explained here, we have a structure around the 0.98500 area, which I showed you. We can see how sharp the rejection of this level is, giving us a clue into the strength of the sellers at this point. So this buttresses my bearish bias on the USD CHF. So let's see how price plays out. But one thing I will say is this: a caution note is this: if price breaks above the 0.98350 area, please stay out of the selling opportunity on the USD CHF, as we want to see price right below this level to be comfortable in any selling position on the USD CHF. So if we see a breakout of that structure, you see, if a breakout happens, you can see that breakout goes right above that bullish trend line, and that could likely be a trend continuation to the upside if we see a retest of that structure happens. So that is that on the USD CHF. So let's quickly do the XA, the silver, before I close for today. I think I have like 3 more minutes left. So let's see how we can attain to the gold, the silver rather. So XAG USD. So what do we have? So let's scale up to the higher time frame. Let's see what's happening here. So on the daily time frame, it's evident that price has been on a strong bearish momentum. Let's see. And if we bring out our line chart with an attempt to identify this bearish trend line, we could have something like this. This is the first structure I was able to identify here, just citing the structure we have here. And then we have another one here, which I'm going to be calling my temporary one. So I will be making this a little bit lighter and then probably dotted line because it looks more temporary to me. So we have somewhere around here. So we have two bearish trend line here. And then we have a key level that we can work with around this point. Sorry. Let's see. Somewhere around the $20.60 area. So we have something like here. So let's label this area for the sake of clarity. So we have the $20.60 level. Now, let's go back to our candle chart. Now, you can see how that level has been a major determinant of price action in the past. We can see in the month of May, it was a demand niche in June. It was broken in the month of June. Then it came back to do a retest of this level in the month of August, hereby emphasizing the bearish momentum that has gripped this market at this point in time. So from a technical perspective, what do we want to be looking forward to join any potential opportunity on this one? Now, what I'll be doing here, we have something that looks like a channel at this point, which I want to be identifying here. And there is a likelihood, based on this current channel that we have here, there is a likelihood that price could come back up into somewhere around here, after which we look out for patterns to join the decline to the downside. So now that we have the scenario here that we are expecting a bearish momentum, we're expecting price to go into the resistant level of this channel where we want to be looking out for patterns to join the decline. So are we going to be waiting for over how many pips that is? For let's say 1,800 pips before we join? That is a question. So are we going to be waiting? Well, it's boring anyway, but let's see if we can actually join this bullish momentum, if it's going to happen. But before we go down to this lower time frame, I saw something here which I want to emphasize so that we don't miss it out when we go to the lower time frame. So we have a structure here also. This structure, hold on a second, I want to make this, I'll make this a black color, and then we have it right at the 18.5, which is also a very, very strong psychological level. So we have 18.5 here. I'll make it smaller. So we have 18.5 here. So we can see the reason why I've identified that level is simply because of how important that area has been in the past. Here we saw it here, it was respected here, and it was broken here. So there is a likelihood that price will come back to reject this level to push price to the downside. That's the scenario. So what we want to be doing now is to scale down to the lower time frame to see how price is playing out at that particular point in time, to now determine if we are going to be buying or selling. So now we are right now on the 1 hour time frame. Let's see what structure we have here. So right on the 1 hour time frame, remember this is the $18.5 level which we identified here. So what I want to be seeing here is to want to be patient enough to see how price is going to relate with the $18.5 level here. So we have the second retest of the structure here. Is this area going to be a reversal pattern that is going to be sending price to the downside? Something like this. Are we going to be having a structure like this to send price crashing to the downside from here? Or are we going to be having a breakout and retest of structure to send price going to the upside? So those are the two scenarios we want to be looking at going into the New York session today. So the first thing we do now, we can see how price respected this bullish trend line here, this bearish trend line here, and has continued to find higher highs. So what we want to do is to identify this bullish trend line. I'll call it a temporary bullish trend line in the meantime. So we have that bullish trend line there. Then for a selling momentum, for you to sell this pair right now, want to see a signal in the form of a breakdown of this bullish trend line. So if we see a breakdown of this bullish trend line, that's a signal. Remember, we're not getting too excited. We want to wait for price to give us further confirmation to join the decline. So we want to see price come back to do a retest of structure, after which we look out for patterns to join the decline to the downside. And where is that structure? We have somewhere here. It's a very simple setup that we can take advantage of. So we have somewhere around here, which is a simple setup that we could. So we want to see a breakdown, retest to structure, then we can join the decline to the downside on the silver. Now, the other scenario we want to see is if price breaks out of the structure. That is simple. If we see a breakout of the structure, then that's a signal that we are going bullish. Then what we want to be doing is to wait for price to give us further confirmation in the form of a retest of the $18.50 level, or probably the bullish trend line, which we identified here, where we look out for patterns on lower time frame to join the rally to the upside. So this is the scenario we are going to be looking forward to on the silver. I think I hope Ashitaka is still in the house. If you have any question regarding what I just explained so far, feel free to drop a word or two in the comment section and let me see how I can be of help. So that is that on this one. So this is the last pair we are going to be deliberating on today. And before I call it a day, let's quickly do a recap of what we have discussed so far today. So the first pair we deliberated on today was the US oil. And what did we see on the US oil? So on the US oil, we were actually expecting a bullish momentum on the US oil. We took the breakout retest of the structure and we were stopped out, unfortunately, as price continued to go to the downside from this point. Now, going into the New York session today, what I cited here is that we want to be patient enough, since we have already witnessed a breakdown of structure here. Then we want to be waiting to see if price is going to give us a confirmation in the form of a retest of the structure, or probably come as far as the $89 level, where we're going to be looking out for patterns on lower time frame that supports a trend continuation to the downside. And I told you that our take profit target should be somewhere around the $84 and the $82 level. The reason is simply because of this bearish trend line. We want to see if price is going to respect that bearish trend line one more time. And there is a caveat to this selling opportunity here. I told you how this $85 level is a very important key level we need to reckon with for the week, and we identified this on the daily time frame. So I told you that if price comes here after taking that selling opportunity, we want to be locking in our profits. Either move your stop loss to break even or lock in some profits, so that we don't know how price is going to relate with this level. Are we going to be having a rejection of this level that will likely push price to the upside? So we lock in some profit at this point and see if price is going to reject it or break it to the downside. And if a breakdown happens, a retest of structure gives us further confirmation to add more position to our existing trade. So that is that on the US oil. Then the other scenario which I mentioned earlier, considering the strength of this key level at the $85 level, that is, we can see this level has been a buying niche for participants in this market. So what I said is that if we are going to be buying the US oil, we will have to be patient enough to wait for price to come back right above the $89 level, even as far as back above the bullish trend line, which we identify on the daily time frame, after which a retest of the $89 level or this bullish trend line here gives us further confirmation to join the rally to the upside. So then we moved on to the US tech, where we cited this channel here that has gripped the market since the beginning of the week. We saw this channel. Price was caught within the $12,150 level and the $12,050 area since the beginning of the week, and I told you that we should be waiting for a signal in the form of either a breakdown of the structure to give us that signal for a bearish momentum, or a breakout of that structure. Lo and behold, a breakout of structure happened yesterday. We saw the breakout of the $12,150 level. Price came back to do a retest of that level, and then we took advantage of this bullish move to the upside. And we are in about how many pips in profit? About is it 37 pips, 40 pips in profit at this point in time. And the first thing I said here is that we should move our stop loss to break even to protect our position against any sudden pullback. Remember, we are on a very strong bearish momentum, so we don't want to get caught up in any sudden momentum shift. So right now, this is what we are looking forward to. So our take profit target remains around the $12,400 area, which was dovetailing to about 250 to 300 pips on this one. Now, I said for if you're thinking of selling the US tech, well, I'll be advising that selling the US tech should only happen when we see a breakdown of the $12,000 mark here. So if a breakdown of this $12,000 mark happens, then that's a signal that a bearish momentum is becoming valid. But we don't want to get so excited as we want to wait for confirmation to happen in the form of a retest of the structure where we look out for patterns to join the rally to the downside on our lower time frame. Now we moved on to talk about the what pairs that the USD JPY, I guess. Yes, on the USD JPY, we were expecting, we had two scenarios that we are looking forward to yesterday. We had the key level at the 140.300 and the key level at the 140.800 area. And I told you that if we are going to be selling the USD JPY, we want to see price break down the 140.300 area and then a retest of that structure, give us a confirmation to join the decline to the downside. And that did not happen. And a breakout of the 140.800 happened. We had a retest on lower time frame, then we joined the rally to the upside. So presently, if you are taking advantage of that move yesterday, you will be in about 95 pips to 97 pips in profit at this point in time. I told you I also missed this trade, and I said for those who missed this trade like me, the only way we can join this rally is to be patient enough to wait for price action to give us another opportunity to join the rally. And this opportunity could likely come in form of either a retracement into our golden zone area. We could see price come back into the bullish trend line, or the 140.800 level where we look out for patterns on lower time frame to join the rally to the upside. Or it could come in form of a consolidation phase, like a trend continuation pattern. It could be a falling wedge or something like this, where price finally breaks out of that structure to send price going to the upside. So these are the scenarios we want to be looking forward to join the USD JPY bullish momentum. Now, another scenario on the USD JPY is that if price breaks down this bearish trend, bullish trend line, then I want to see this as a signal that we are going bearish. And if a retest of structure happen, we join the decline to the downside. Then we moved on to talk about the GAP card, where we are still in profit on the GAP card. We took advantage of this move yesterday after sighting a double bottom structure on the 1 hour time frame. We saw our price came into the 1.50500 level. We saw the first touch during the early hours of yesterday's trading session. Price came back to do a second retest. Then we had a neckline at 1.510 area broken, retest of the neckline, and we joined the rally to the upside. So on the GFP card, we are in profit, and the first thing I said is that we move our stop loss to break even, or probably move to lock in some profit so that we don't get caught up in any sudden pullback. Now, for those who missed this trade yesterday, we tried to look out for another opportunity that we could use we could take advantage of this move. And the first thing we did was to connect the series of higher lows here to form this resultant bullish trend line. As you can see, price has consistently respected this bullish trend line since the beginning of the week. And one thing we want to see is price coming back to do a retest of this trend line for us to join the rally to the upside. In addition to this, I shared with you another level at the 1.51750 area, which has been an area where participants had bought the GBP against the card. So we want to see if we are going to be having a rejection of this level one more time. If we have that rejection and you sight a reversal pattern or multiple rejection of this level during the New York session, you want to be taking advantage of that move. Our take profit targets still remain around the 1.53 and the 1.525 area. And the reason why we're having it around this area is simple. If we look at the past, we can see how this area has been a selling niche in the past and a buying niche. So it has been a major determinant of price action. So we want to see how price is going to relate with this level. Hence, we want to place our take profit target around that area. And if we have a breakout of that level, then we could be thinking of how we want to join the trend continuation. Now we moved on to talk about the USD CHF, where we've been expecting the selling momentum to happen on the USD CHF. We had a signal yesterday in the form of the breakdown of that bullish trend line here. So we saw the breakdown of this bullish trend line. We entered the trade, price came back into our entry point. We were taken out of this position, and I told you that there is a likelihood that price could come back to do a retest of that bullish trend line, which also shares a confluence with the 0.98350 level, which I identified here, where we will be looking out for patterns to join the decline to the downside. So this is the scenario we are looking forward to on the USD CHF. But one thing I stated here is this: if at any point in time during the New York session we witness a breakout of the 0.98350 area, then we want to be seeing that as a signal, and the retest of structure will give us a confirmation to join the rally to the upside. Then we close the day with the silver, which Ashitaka brought our attention to, and I'm not sure if Ashitaka's still in the house. I don't know if he's still in the house. Okay, I can see Ashitaka's comment. Okay, yeah. Well, we don't. I actually don't trade correlations anyway, because I see. I want to see the chart for what it is. I want to see what participants in this market are actually doing based on the technical structure that is evolving at that particular point in time, rather than using it to compare other pairs. So I'll rather look at the pair for what it is. So that's why I tend towards technical trading. So now on the XCG USD, what we identify here was the key level at the $18.50 level. And one thing we're looking forward to are two scenarios. And the two scenarios is coming in form of either, we can see that this level has been a major determinant of price action in the past. We saw a selling niche at this point, and price is right back within that zone. So are we going to be seeing another selling niche from here? That's a question we want an answer for during the New York session today. And if that is going to be happening, well, I'm not going to be selling the XCG USD unless I see a breakdown of this $18 $18.7 area, which also shares a confluence with this bullish trend line. So I want to see the signal happen. Then I don't want to be too excited. I want to wait for confirmations to happen on my lower time frame, where I want to be joining the decline to the downside from here, with the take profit sitting right around the 17.4 area, or somewhere around this bearish trend line here. That is one scenario we're looking forward to. Then the other scenario we're looking forward to is if price breaks out of the $18.50 area. So if I see price break out of that $18.50 area, remember, I don't want to get too excited at the sight of the signal. I want to wait for price action to give me further confirmation, which is likely going to come in the form of a retest of the $18.50 or probably this bullish trend line, or even it could come as far as this level. But most importantly, what we want to be looking out for is a reversal pattern to join the rally to the upside. So this is the scenario we're looking for today on the XCG USD. So we were able to do how many pairs today? 1, 2, 3, 4, 5, 6, 7 good pairs today. That's quite a lot of opportunities lining up for us this the New York session today. So I wish you be on standby to be able to take advantage of that opportunity. I'm very sure we are well equipped. We have all the possible scenarios that could actually happen on all these pairs, and we will be able to take advantage of any move when it finally happens. So thank you very much for being around with me. I really appreciate every one of you, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, same place, Extreme Speed Live app. Call your friends and families to download the Extreme Speed Live app so that they can be part of this family, and let's come together one more time and look at the markets and make a decision and plan towards the New York session. Thank you very much, and I hope to see you tomorrow. Best of luck today, and bye bye.